is Griffin.
My tummy hurts. Pretty good, Brandon.
Hey, what's going on, guys? Good evening. It's Nick with Off the Chart Trading. I will be doing the daily recap for today. It is Tuesday, November 9th, 2021. I don't know if I need to really say the year. I would assume this information would be irrelevant in a year, but you never know. Anyway, welcome to the video. I figured, before I hit play and before I just trying to have a game plan for some of this stuff, and I thought it'd be, I guess, good, or just to see some of the, whether it be call outs or some of the ideas that we had, because I'll be doing the videos on Tuesdays and Thursdays, so a lot can happen in between those days and also the weekend. And if I'm not doing it on Friday and Monday, this is the first time you guys have heard from me since Thursday. So I thought it'd be good to, hey, what did we talk about last week and how did it unfold, or what happened into last week, and then obviously starting out this week. So I figured I'd start the video with kind of a somewhat recap of last week. Tuesday I didn't really talk about too much important. One, I was probably a little delirious because I didn't eat for like 2 days, my first juice cleanse. So I don't know, one, for my first video, and then two, maybe some of it didn't even make any sense. I honestly didn't watch it. So if some of it didn't make any sense, but I will say, I do remember when I showed you guys my ETF screen, I made a comment about industrials look pretty good for a potential continuation and a move higher. And I was just looking just to see, because I didn't personally take the trade in Boeing or any of the other stuff I mentioned. But, sometimes in a room, if I'm in 3 or 4 things, I might see other trades manifest, whether it be a day trade, a scalp, a swing trade, or an idea. So if I see something, I don't mind mentioning it, because a lot of people will make money in the rooms just off of some of the ideas. Like, hey guys, the Russell actually looks pretty strong versus some of the other indexes. And then, somebody in the room be like out IWM plus 1,000 or whatever the case may be, just off of that information. So that's kind of the beauty of the room. It's kind of a big think tank of just throwing different tickers, different ideas, and so forth. So I thought it was cool to start these videos and be able to do something similar with that. So what I wanted to start, because I mentioned XLI, which is the industrial sector, I said continuation, meaning, basically it looked like it was going to potentially head higher, even though it didn't look that great, some of the stocks within the industrials. But I specifically mentioned, because every time I think industrials, I think of, I was going to say Butterfly. That's wishful thinking, BFLY, one of my other holdings, but Boeing and Caterpillar. So I did the video on 11/2 that night. I mentioned, potentially looking at industrials, specifically Boeing. And I mean, realistically, if you did anything that following day, as you can see, it was actually pretty good. We had that nice move. I think a few people in the room actually traded it on Friday as a day trade, because it did have a pretty good breakout. But my point is, if you did end up taking a trade, the following day, that was basically the lows if you got in that morning. If you took that information from the video and went long Boeing for a nice swing trade into the end of the week, that would have been, good for what, 15 points. So it doesn't mean it's always going to work that way, but I'm just showing you, as far as that is one thing from my delirious non-fed mind that I thought of was industrials. And the same thing could be said, like I said, those are the first two that come to my mind. So the following day, if you did the same thing, bought on Caterpillar and followed through and got out on Friday, that would have been a good swing for that week. Now, I'm not a huge fan of doing weeklies and holding into Friday personally. To me, that's kind of a gamble. But if you did it, either you played XLI directly, or if you played Caterpillar or Boeing for the rest of that week, you did fairly well. Now, heading into Thursday's video, I think I titled it, be careful here, or something along those lines, because of the put-call ratio, where we are in the ATRs, the overall indexes. So I did end up putting on a SPY hedge that following day after I gave that information and got out of it today for a small, I don't even know, let's see. Yeah, it was I think a little less than this, because I think I was down, maybe it was flat into the day, but I was up a little bit on Friday, then I was down a little yesterday, and then today holding it through. I think it was a little over $1,000. I don't know if it was $1,150, but nevertheless, taking a trade the end of last week and selling it into today's weakness paid off as well. Once again, mentioning that on Thursday's video, as hey, we're kind of extended here. I would be careful. I'm not calling for a 500 point drop in the ES or anything crazy, but it's just, hey, it doesn't matter if you've been trading for 5 minutes or 5 years or 50 years. You look at some of this stuff, and we'll just segue into the indexes themselves. I mainly, as I said in the previous videos, focus on the futures contracts. It's live right now, trading and stuff. So I try to I look at the futures because they trade more, they provide more data. Now, as far as gaps and other points of reference, then you typically want to look at the SPY or the SPX. But for me personally, I like to look at the futures contracts, specifically the S&P, which is the ES, 90% of the time. So when I'm in the room and I'm talking about weakness or this or that, unless I specify a stock, I'm always talking about the ES. I think out of all the indexes, it's the most balanced. When you think of tech, you think NQ. When you think of the Dow, it's 30 stocks, and stuff like that. Russell, small caps, and some banks and stuff. So out of all of that, I think ES is the most balanced out of all of them from a pie perspective, if you will. So that's why I focus on it, because so goes the S&P, so goes the entire market overall. There'll be divergences. Sometimes we'll see NQ up 200 and everything else is red, but for the most part, almost all the indexes do trade together. We're right after hours here, down about 675. Nothing too crazy, but I would think we come down to at least the 8. One thing my buddy Mike, shout out to Michael, helped me make these. I thought of it and he helped code, because obviously that's not something of my expertise, but I really like these candles because it simplifies the trend. Like visually you should see, hey, there's a lot of green here. And I just try to keep it as simple as possible. There's a running joke in the room: green good, red bad. Just try to keep it as simple as possible. So you can see we got a lot of green candles. Basically what this is, if it's above the 8 EMA, they're green. If it's below the 8 but above the 21, it's cyan or whatever color it is. I call it teal. You can see that color over here. So if it's between this, if it's below the 21 but above the 34, it's yellow, almost like a caution kind of thing. And if it's below all of them, it's red. Now sometimes when you get, you can see the different colors, it's kind of a chop, but once they start turning green and you can see that and you get the buy arrows and so forth, you can kind of follow that trend. What's cool about our site is we don't charge you guys for indicators. We made them all in-house, and I didn't have respect for coding to the level I do now, because we did put a lot of, you have an idea, you code it, and then this happens, but then it's changing to blue instead of green, and you got to figure out why. Then you got to start over this and stuff. So we took a lot of time to make this, and we provide it for free. We don't charge anything extra for members. I know a lot of sites will you pay a monthly fee to be in the room. You want to have a web a class or whatever, webinars. We don't charge for any of that. It's all included in the membership. So everything that you're looking at, you have direct access to. So if I'm using it, you can use it too. Sometimes it's good to have hands-on with what you're looking at. So I figured I'd mention that. But anyway, so you can see a nice uptrend overall. One thing I actually made this from the previous script, and you're getting that sell on the NQ. I made it for Brett. It's basically a 246 cross on the EMAs. It's more of an aggressive, for timing and stuff. Obviously, the higher the EMAs, the less likely you'll see them on your screen as far as that. But on a daily, you can see we haven't seen, ever since that buy over here, like that was his, and that's just an 8 and 21 cross. So 2 buys over here, you haven't seen anything. It's just been straight up. So that might be the first warning sign of potentially a pullback on the nearer term, because like I said, it is a 246 cross. So those EMAs are on, more aggressive, if you will. They're going to hug price a lot closer than say a 21 or 34. So once again, just a point of reference. You can see that we've gone straight up for almost a month now, so it's safe to say we're either going to come down to the 8. Another thing I like about these is you don't have to try to line it up or whatever. You can just literally see the 8 is 16 1 2 4 right there, and so forth. So you can just see the numbers and just see where we're currently at and just do the math difference if you want to. You don't even need the EMAs on there, but just out of me using them for 5 6 7 years, I still like physically seeing them on the screen, but they're not necessarily required because you have access to it right here. So that's pretty cool. But NQ, something to watch. I think it was fairly weak today overall. I'll look at the internal screen too, so we can kind of see that, because you can definitely see in that first 15 minutes of the day for the NQ, there was definitely some weakness. The Dow we talked about. I think overall the Dow, even though it was, fairly weak broadly speaking, the Dow held up pretty good. I don't normally focus on the Dow mainly because of the reason I said earlier. It's 30 stocks. 5 have a good day and the rest are kind of sideways, and it's probably going to do better than the average. So I don't put too much weight into it. And then Russell, I don't know if I mentioned it in the last video. I have been personally waiting for the Russell to break out. It has been in a high compression squeeze. It's just been consolidating for 5, 6, 7 months straight, and finally last week decided to finally start moving. Will it continue? It should, but we'll just have to wait and see. But I have been waiting for risk on trades, money going into small caps. It's been I don't know if to say a theory or just an idea, speculation, whatever word you want to use, for myself over the last couple months, thinking that towards the end of the year, early next year, risk on trade would be back on, especially after growth and a lot of things have been hit. That money would potentially be rolling into Russell, maybe leaving Apple and maybe leaving Amazon and Google and some of the other ones that have just run straight up for years, and taking profits in Tesla, and some of these other names, and potentially putting it into these. Once again, going to Thursdays, like I said, I think I said, be careful here. Tesla, speaking of that, we'll look at Tesla before I talk about that, but look at Tesla. I mean, got beat down. I think it's a mix of one. It's should be obvious when a stock goes up 40-50% in a matter of a couple days, that a little more than a couple days, but you can obviously it came pretty far pretty quick. So for it to have a pullback, regardless if it's his tweet and that little him selling 10% of his, it's always this is going to happen regardless of what the news is. And that's the funny thing I always look at, like, you'll wake up tomorrow and you'll get the CNBC alert, Dow down 200 points because of COVID, whatever the case may be. It's like, no, maybe because we ran up 8 days straight, that there's some profit taking, some rebalancing, and just overall a red day. And it's okay. Today was a red day. If you're in our Slack, which we also, have a free side, I took a picture of the stock almanac and I mentioned, hey, this is the only bear icon I see for the next couple days, for this week and next, if I'm not mistaken. I have it right in front of me. So I'm like, hey, if there's going to be selling, and it's not if, it's when, and you have other tools, whether it be this book, whether it be an indicator, that kind of line up and kind of follow that consensus, then you can kind of trigger it. So that's why I mentioned it last Thursday, to potentially prepare you for today. I even mentioned yesterday, maybe it's turnaround Tuesday. People just assume that naturally means buying, but when something can turn around, it's one way or the other. So for the ES to close down, I don't know what it was, 20 something points, and then now be down another 7 points here, it's not too surprising. But I do have that XLY short on. I got in like somewhere early last week, just anticipating this move that happened today. And it's hard to time the market sometimes when something should happen, but you don't know if it's today, tomorrow, next week. But I got back a lot of it. I'm still down on it, close to break even. Let me see, trade. It gets funky. It says P1 open. I don't know. I have next week, so obviously I need it to drop a little more. But something with these ETFs, it gets a little funky into, where am I? I want to see my position. Oh, there, duh. I had the 200, and it wasn't bad when it was at like 203, but shot up to all the way up to like 212. So it did go against me a little bit. And the numbers get weird towards the close. Like the last couple seconds, the bid-ask gets wide. Look at that. So 72 cents to 180. So it gets a little funky, but it'll probably adjust tomorrow. But it said I think I was down, $300, $200, which to me is close to flat. But we'll see. I have another day down, and we'll see how that goes. Let me see. We could switch to my internal screen real quick. This is what I was talking about. I got that. This is another indicator that we offer. It's just the 8, 21, and 34 cross at the same time. I think it's a powerful tool visually, that you see a white arrow and then it's straight down. And we look at the color candles. What color were they all day? Red and yellow. You know what I mean? So when you see that, you can kind of follow the trend. You don't need to really use anything else, because you can see after that first open, we dropped and we tried a couple times to break above the 8. And it's just when it's riding the 8, that's a fairly aggressive trend down. Most of the other ones saw a little selling, but you can definitely see that there was a lot more. And ES kind of similar. ES and Q kind of followed suit today. I mentioned that this morning too. I think it was Tom. Somebody had calls. Everything was looking great the first 5 or 10 minutes of the day, and I'm like, listen, the put call's at 0.31. Everybody and their mother and their mother's mother is bullish this market. Think of a scale, and there's 100 little pieces. Like 95 are on one side. That's not balanced. So you need to be aware of that and just tap yourself on the shoulder sometimes and be like, yo, this is a little euphoric. You need to take profits and so forth. And then literally 5 minutes later, flush. So that's another thing that's important for the room is if you're not familiar with internals or market profile or any of this other stuff, it's good to get other pieces of information and make it your own. So I think he actually sold his calls for either a very small loss or small profit, flipped, went short, and made money both sides, which is pretty awesome. Nothing else to really report here. Like I said, pretty neutral day. It's definitely more noticeable on the profile, which we can take a look at in a second. I actually want to... the main point I wanted to go over today was EVgo, which was... I have a lot of positions I like long term, but if you can make a trade out of it, I mean, look at that, crazy. I mean, it was $19 pre-market. My average now is 8 something in this one, and I'm a fan. I think, like I said, there's the trades, there's the day trades, future scalping, our penny stocks. We do a little of everything. You can pick your wheelhouse and stay in it, or you can be a jack of all trades when it comes to trading. But one thing is, everybody in the room already knows I'm a big fan of EVgo, my favorite EV charging play. And I actually bought some, I think it was over here in the 20s back in February. And, that was when SPAC anything was announced. It was just going crazy. And I bought, I think, 150 shares at $20. And I was averaging down. It had a spike somewhere over here when it had the GM thing at $16. I got my average down to $15. And when it went to 16, I'm like, you know what? I got a lot of money. I had like 2,500 shares. So I ended up putting a full stop. And once I got stopped out, it was still around the $15 mark. So what did I do? I ended up getting the 1250 calls for February. Because in my head, if I like I said, that win-win mentality, if EVgo goes lower, then that's me being able to buy it cheaper. And it did. It went below 1250. So I started buying shares of EVgo once it got under $10. So now you can see I got 1,000 shares. I had 1,500. I sold 500 recently. But overall, solid day. I ended up selling those calls for a profit. I was down like 80% like 2 days ago, like Monday. And then tonight, able to close these out in the afternoon for, it says 2,500. That was today. That was daily profit, but I was up. I think I made 2,100 or 2,000 overall today. I didn't take any trades today, but I was able to manage positions in certain things. I got out of Voyager. I got out of those SPY puts. I got out of this, and then one other thing. Maybe that was it. Oh, another quick trade in that IPOF or whatever. So I had a pretty solid day. I made about $6,200 locked in. But the reason I wanted to go over EVgo is I like the stock. I was too leveraged. I had too much money in this stock. Obviously, everybody who's a trader wants to try to get as low of a buy-in as possible. So how did I do that? I came out with the idea back in August, early August, late September. It was late July, early August, that I wanted to hold this position long term, but I didn't want to have so much money in it at the time. So I bought a 10 lot of the 1250 strike, because in my head it's either not going to go lower and I'll be assigned the shares and I'll be good, or it does go lower and I can buy shares and then, either this expires worthless or whatever the case may be. But it worked out beneficial for me because I was able to get my average down. I don't know. I honestly, I trade on my phone. I use my desktop for my screens. I got 6 screens, but I trade off my phone. It doesn't show my average on here, I don't think, but it's $8.20, I think now, which is roughly $1 above the all-time low. So when the stock's at $15, $16 or whatever, that's pretty good. You're up almost 100% in a matter of 2 days, which is pretty cool. But I just wanted to give you that, idea that if you like something long-term, use options. I wouldn't consider, even though I was into the next year, I wasn't really a leap. I wasn't going out a full year. But at the time, buying something at the end of July, early August, that gave me, 6-7 months or whatever the case may be to come up with an idea. And if it went higher, great. Then I'm making money off those calls and I can either get assigned or sell half or do whatever. Or if it drops below it, I have the ability to buy shares. So that's exactly what I did. I was buying all this up. It just makes sense to me. I'm big on EV. Loose, it's my biggest holding. All these other stuff. And I'm in what's it, VLTA and some of these other ones for charging. I'm big in the EV sector, and I honestly think that is the future. And when these get beat up, when they go from $23, $24 to $7, I'm buying it, 70, 80% off. To me, that's a steal. So I've been buying in over here, and then boom, sold the calls today for a nice profit. Sold those 500 shares to bring down my average because I didn't initially want that many shares. I wanted to have 1,000. I'm going to hold 1,000. It does have earnings on the 10th, right? Yeah. So that's something that will probably bring it back down to earth. We'll see. But in the long haul, I just wanted to go over that you have options in options, hence the word. And sometimes it's good to take advantage of it, but at least have a plan. Like I said, the way I structured this trade is I was going to win. The only way I talked about this more or in the afternoon is the only way this would not have worked if EVgo stayed around $12 or $13. Then it's kind of like it's not cheaper and it's not more, so it's kind of right in the middle. But realistically speaking, it was either going to continue to drop or head higher. So this was a great trade. So not only was I able to make money on my shares, but also lock in some profit on those options, which I thought was pretty cool. What else? Let's take a look at the profile. Nothing too crazy. I mean, it's not great when you open up all the way over here, like the overnight inventory is somewhat sloppy. You open up here, you go up a little higher, and then you just continue to drop. It almost looks like a B. I would consider this a B formation, which is not very bullish. You would think maybe B for bull, but no. Just basically means in that first 30 minutes we dropped, and we spent the majority of the day on the lower part. You'll see there's only one line I drew today, and that was just referencing 11.4's profile. The reason I picked this, and if you look, that was actually pretty decent support. Let me refresh. Every time I turn this off and turn it back on, it request tick data. You'll see that there wasn't that much volume on a day where there's over 1 million contracts on the ES. How much was traded below that line? Not much. Just quick math, a little over 1,000. 1,500 or so, give or take. That's not that much when you think of, when you have 1 million contracts, 22 contracts of the lows breaking that. So that was actually a decent level of support. And no one probably would see that unless they use market profile. Why? You have the most time spent, you have the most volume spent, and you have halfback. You have 3 points of reference all right on each other within a tick or two. So that's why I put that level out today. I gave it to everybody, and it held it pretty good. I'm not a stickler for exact levels. I'd rather it be an area. I always tell people a range, an area. I never go by a specific level because algos will break through that level purposely because people think they're, unique and original and, I'll put it exactly right here. And then, what happens? A little bit of a flush, maybe a point or two, you get that flush and then they buy it back up. So, if you're going to play this and that's your stop, you'd put it over here somewhere, 3-4 points out of it. You would never put right at the other, right at that specific level you have. At least that's how I am. I know some people trade very technical. If it hits it to the penny, I'm out. That's not me. I'd rather just be somewhere in the range or a certain area, more relaxed when it comes to that. But one thing I talk about halfback, I think of it, I'm a very visual person. I think of halfback, which is this gold line, is just think of either Squid Games or just visualize, bears and bulls playing a game of tug of war. Well, who won today? The Bears did. Where most time was spent down here, most volume spent here. You got VWAP here. So the points of reference that I focus on when I'm looking at the profile were all below this gold line. So when you think about it, where was all the bat? It was down here. So in a sense today, this isn't incredibly bearish, but at the same time, it's not bullish. And sometimes people are like, well, if it's not bearish, it's not bullish, what is it? It's sometimes using points of reference to say, hey, this is incredibly bullish. Well, then obviously you can go long, or this is incredibly bearish. When it's something in between, it's okay not to have an exact idea where something's going. I'll say if we end up breaking lower overnight and open up down here, then this could be a can of worms that we end up coming back to at least the bare minimum, the 8 on the ES, or potentially come down to the 21 before we go higher. There's a lot of open area over here, and I wouldn't be shocked if it gets filled over the next couple days, couple weeks, whatever. Like I said, it's impossible to time the exact day and time that the market will have a pullback. But using points of reference, like today being red, I mentioned that last Thursday going into this week, just to be careful. So you can sometimes have a point of reference and try to make a trade off of it. One last thing, if you guys aren't in our Facebook group, I do recommend joining us there. What's great about the room, it's not just strictly trades. It's not follow the leader. It's more of a circle rather than a classroom where there's that one person on the auditorium talking. We use GoToMeeting, so if you have a question, if you want to engage, you can. And we have a lot of fun. This is our Facebook group. Me and Brett are the Island Boys. Some haters will think it's photoshopped, but this is the real deal. Not only do we have fun, people say they come for the trades, but stay for the entertainment. Sometimes we'll be done trading in the first 30 minutes. and we still got plenty of time to kill. So we talk. We have our lead Photoshop expert. You can tell I shouldn't say it's not Photoshop. It's legit. But when we do need a Photoshop, we use Jordan. Shout out to Jordan to come up with some pretty cool ideas. But anyway, if you're not a member to the site, by all means, check us out at offthecharttrading.com. At the bare minimum, join the Facebook group. There's a lot of good information in there. We've had some people cover more than 1 year to the room off of one of our ideas. Me, 7:30 in the morning. Hey, Lucid's at $16 on September 1st. Maybe you should buy some here. Sure enough, some people did and covered the cost of the room for a couple years. So it's not like every other Facebook group. There's 50,000 people in there, and it's just bots and spamming and stuff like that. We are really good. Our streets are probably the cleanest on the internet when it comes to that. So come check us out. Hopefully this video has been helpful, and I will see you guys in the next one.